That's the best I've had yet. Hi everyone, welcome to this month's episode of We've Got the Keys, Mortgage Talk with the Broad Squad. This month we're on location at X Golf in Pittsford Plaza. We'd like to thank Nick Ratcliffe and his staff here at X Golf for letting us use his facility and have fun with the golf simulators. This is a fantastic place. If you have not been here, you've got to come. They've got great drinks, although we're not drinking right now. But we did order a sampling of some of the food that he has. This is great eats. So come down, have some cocktails and some food at X Golf in Pittsford Plaza. So this month, we will be talking about mortgage myths. Don't let mortgage myths drive you away from homeownership is our topic for this month.
Drive you away, get it?
Yep.
Drive you away.
Okay.
That's why we're driving range.
I might play on words. I always gotta play on words. I'm always lost now.
If you haven't seen our last month's episode, please go ahead and take a look at that on our YouTube channel. We talked about credit last month, so we have very interesting topic of discussion about credit. We were on location at Abbott's last month, so we're trying to take advantage of the nice weather and get out on location as much as we possibly can. And we always love to highlight our clients here at GRB. That's why we're here at X Golf this month. So now it's time for Broad Banter! Tina's going to kick us off with the Broad Banter this month. Tell us what's going on.
It's been such a busy summer. So you ladies know that I started a Doodle Academy, which is a art, camp for kids ages 4 to 10. And this was my first year, and it was awesome.
Great.
So for the last, each Saturday of August so far, the kids show up. I'm doing it at my place on my deck. The weather's been cooperative and beautiful, which is great. And it's really about intuitive painting, and the kids are, oh my gosh, I had spray paint, we had rollers. Last week we did, how can we make paintings without paintbrushes? And so they were using everything from mashed potato makers to sponges to their hands to,
I love that.
It's
That's
awesome.
great.
And then a week from yesterday, actually, so we've got one more session, and then next Wednesday we're having an art show for the kids. So we're going to display everything, have it framed. They're going to invite their family and friends. They'll get all dressed up. People can buy their paintings if they want. So we'll put the little red dot on there, and they'll have artist bios, and it's just, oh my gosh, it's been just such a blessing, and I absolutely love it. And it's inspired me as well in my paintings. Suzanne?
Me? Oh, wow. I just got back from a trip to Connecticut to see my grandson Joshua, who's 21 months old. I can't believe how fast time goes by.
Yes.
But boy, I need a vacation to rest. He wants to go to the park every day. He brings me his shoes, socks, outside. It is hysterical. But he is chalking up a storm and getting ready for him to have a brand new sister that's due September 6th. So I was going down to hopefully help Michelle too, but I guess my help was keeping Joshua occupied so she could go through some
Absolutely,
things.
it was.
And they work from home, so it was kind of helpful. And it gave her mother a break, Michelle, because her mother watches Joshua every day, so it kind of gave her a break to go and do things that she doesn't normally do. But it was great to spend time. Great weather.
Yeah.
Oh my gosh, went to the beach. We went to a splash park, which was really fun. And just lots of time with him.
Yeah.
They grow so fast. So.
Yeah.
So yes, count down the days for the next one.
Great.
And you, Laura, you've had a busy summer.
Yeah, it's been busy. Just moving my kids back to college. My daughter just moved into New York City to go to FIT, and we were just down in New York City for a quick 48-hour move-in.
Wow.
That's why I want to be there.
Yeah, it's like we had this very specific block of time. So I go to parent orientation because that's what I'm supposed to do. The girls left. They were like, we're going shopping in Soho. They went down to Soho, and then my husband went to church to pray that we would get out of New York City alive because he hates New York City. He I'd much rather be up in the mountains where everything is quiet and calm and peaceful, because it's not any of that in New York City. But it was a good trip, and she's doing great, and she's all set. And my other daughter's doing an internship with Rochester District Golf Association,
wow.
RDGA. So
Nice.
it's so interesting that we're here. I'll have to bring her in here. She's been out on the real golf course doing all of their social media.
Wow. Good
So
for
it's been
her.
great. Yeah, it's been really
Exciting.
good. And, it's funny. You live vicariously through your children, right?
You do.
People say, oh, what's new with you, Laura? I'm like, well, actually, nothing's really new. Right. Here's what's new with my kids.
Right.
Well, I've been enjoying the hot weather for sure, because
yes.
I love my pool time with my book, so I've been enjoying the weekends with that for sure. Getting ready to get mine back to college. Mine's headed back to St. Bonaventure next Saturday. They're starting a little bit late this year, so
wow.
we're getting we went through all the college stuff last weekend, repacked it nice and neat. That was good. A lot of stress off of you. It's done ahead of time. My older son just got a new job, so I'm very excited for him. And my niece, who now lives in Nashville, is in town, and we're going to have a family thing on Saturday, and I'm so looking forward to that. I have not seen her since November.
Wow.
So that's going to be a lot of fun, and we'll have the rest of the family there, and my other niece and her little boy, so it's going to be fun. So I'm looking forward to just a little more hot weather before the summer ends, right?
I think we're going to have a
sail
good
into
fall. I'm
September.
being optimistic. We're
I
having
think
a-
so.
yeah.
I think so.
But it's been wonderful.
Lots of good broad banter for the month.
Yeah, absolutely.
So now we're going to get into our topic about mortgage myths, because there are a lot of mortgage myths out there for sure. We're going to have Tina kick this one off, and she's going to talk a little bit about having a higher down payment and doing shopping for rates and how that all works.
Yeah. So, I mean, things have changed a lot, particularly in the last 5 years, but over the last couple decades, obviously things have changed. People used to shop for rates to find their lenders years ago, and that market is completely changed.
Yeah.
Because most lenders use something called live pricing, which is there's all these investors that purchase the mortgages after you close. They're the ones that are really setting the rates based upon things like you guys help me out here.
Credit.
Based on credit, but it also looks at the 10-year bond. It looks at what's going on in the economy, stock market.
Kind of like the stock market, right?
Yeah. It's all of that. So it can change. Not that it's bouncing all over the place, but it does change on a daily basis, or it can. So shopping before you get to have an accepted purchase contract really is wasted time, to be honest with you. So I've had a lot of people, well, this person's going to give me this rate. You don't even have an accepted contract, and we don't know how long it's going to take before you get one.
Right.
So realistically, do I encourage people, if they want to shop after they've got the accepted contract? Absolutely. Can you bring a rate to me so that I can possibly meet or beat it? Absolutely, 100%. But I also tell people, when you're shopping those rates, you're looking at, it's a comparison. When you go shopping for a dining room set, okay?
Yeah, right.
If you go to Walmart, you're going to get it for, I don't know what, $200, $199. If you go to
Raymour and
Flanagan or Stickley, you're going to get it for several thousands of dollars.
Right.
Our pricing tends to be in the middle, and there are some compliance things that we have to follow, okay? So we can't just, and I always joke, they won't let me be the pricing manager because I would give everybody 1%. Like 1% for you and 1% for you. And then we would close down and we wouldn't exist anymore. Right. So our prices are priced based on all those things that I mentioned earlier. However, is there wiggle room for us to match or beat a competitor? Absolutely. Yeah. So we ask for that loyalty. We ask if you appreciate the way we work with you, that if you do shop after you have an accepted contract, that you just tell us about it. And if you get an offer that's way better than we can beat it, I tell them, go.
Right.
But more often than not, we can match or beat.
Right. So the myth of shopping for a pre-qual, Tina.
Beforehand is honestly, don't do it. It's a waste of time. It's a waste of time.
So Suzanne's going to talk a little bit more about, is it necessary to put a 20% down payment, and should you avoid PMI?
Right. So kind of to go with what Tina was just talking about, that does a higher down payment give you a better rate? Well, not all the time does it, because those other factors come in. So when you are getting a pre-qualification, yes, we can talk about different down payment scenarios. In this market, typically when you want to be at the highest price that you can afford, you may not be able to do that full 20% down, and that is okay. Everybody thinks, oh, I can't have PMI. Well, not the case anymore.
Right.
PMI in this day and age is different than it was back in the days, even going back 10 years ago. Everything is a little bit better priced, and it is based on, of course, your down payment, your credit score, your debt ratios. So each PMI for each person is going to be different in their payment.
Can you remind us what PMI stands for?
Private mortgage insurance. Thank you, Tina. I should have started out with that.
We love our acronyms.
We do.
We sure do. And that's on a conventional loan. So you have a different acronym, MIP, mortgage insurance premium, on a FHA loan, and that's always going to be on, and that's a little different story. But we're talking about putting 20% down on a conventional loan is not necessarily needed. So the people who are saving and saving and saving, and they don't think they have enough because they don't have 20% down, it's okay. We'll review with you, at your highest and with the least amount down and what you can afford. And that's really going to be your best way to go into this market. And then after you have an accepted offer, then we can kind of go back, okay, how much monies do you have to work with? And then we can look at the different down payment scenarios specifically for what your offer was accepted at.
Is PMI like a huge amount?
No, not normally. But it is based on your credit, So a lot of times if you have a score of let's just say 700 and above, it's going to be a little bit better than if you had a score between 660 and 680. So when you have a loan officer and they're telling you, what, your score is in the mid 600 range, they might say an FHA program is better for you, right? Well, with FHA, you wouldn't want to do 20% down because it wouldn't make sense. As I mentioned, mortgage insurance premium on FHA, it's always going to be on there regardless of your down payment. But that amount that is added to your payment versus the PMI on a conventional loan is going to be less. So that's sometimes why an FHA loan is sometimes better for those scores that are a little bit under that 680 mark.
Everybody's very individual.
Yes.
Very unique.
So Laura's going to talk a little bit now about lower credit scores and whether those are a deal breaker and what student loan debt may do to your situation. And it's not always bad that you have student loan debt.
One of the myths is that a low credit score is a deal breaker for a mortgage, and that's just simply not true. I once had a customer with a 620 credit score close on a conventional mortgage because he had overall very good credit history. He had one minor 30-day late payment because he had a family member that passed away. He had to go out of town. He forgot about the payment. He provided me the obituary. He provided me a letter of explanation, and he closed just fine. Now,
How many lenders would do that, though?
not very many.
Look at that 620 and they'd be like, you're FHA.
As soon
Right.
as you pull that credit report at GRB, we're not looking at the score. We're looking at the score and the data. And the data really tells your credit scoring. So we don't always look at the score, but we look at the data behind the score. So a low credit score doesn't mean that you can't get a mortgage. What a low credit score may mean is that there's some room for improvement. And Genesee Regional Bank has this fantastic tool called the Credit Expert, where we can run a simulation and tell you, okay, here's what you need to do to reach a 680 credit score, or here's what you need to do to reach a 700 credit score. And if you do exactly what we tell you to do, and pay these debts in exactly the way that we recommend, your score should go up. And most of the time it does work.
It does.
It's a simulation.
Very accurate. It's a simulation, right?
It's pretty good. Another myth is that student loan debt is a barrier to home ownership. It's not. Most people who get out of college today have some form of student loan debt. Student loan debt reports in many different ways. Sometimes you are in repayment, sometimes you are in forbearance, sometimes you are in deferment, and sometimes you are in default. Those four things look very, very different when it comes to your mortgage.
Yes, they do.
So if you're in repayment, it's fine. We can see that.
Yes.
If you're in forbearance, that's fine. We can see it. If you're in deferment, it means you're probably still in school or taking classes.
Right.
That's fine. If you're in default, That's not fine.
No.
We have to put the brakes on everything and get you out of default
Yes.
because a student loan is generally one of the larger accounts that mortgage looks at
Yes.
to determine what you've paid and how you've paid,
Yes.
but then how you are predicted to pay in the future.
Yes.
Right? And so a housing payment is really important. A student loan payment is really important. A car payment is really important. A credit card payment is really important. Those are things that all go into that decision on getting you pre-approved for your mortgage. So it's critical to make sure that you're aware of those student loan payments. We see a lot of customers who go to college and get a job, and then those student loans come out of deferment, and then they forget to make a payment, or
Yes.
they're not sure, or they
Yes.
moved and they didn't know there was a payment due, and now we've got a 90-day late payment on a student
Yes.
loan that could have been avoided.
Yes.
So
Yeah.
it's really important.
I'm seeing a little bit of that now because during COVID, these student loans were in deferment for everybody.
Yes.
And they're now all starting to come out of deferment.
Yes.
And the communication isn't
Yes.
very
Yes.
good
Yeah.
with the government and the buyers. They're using email addresses. So if you're not using the same email
Right.
address, it's people don't know it. And I have had a couple of buyers recently who have had student loans that are in default and they
too.
had
Yes.
no idea
Yeah.
whatsoever
Yep.
that they were
Yes.
in default.
Yeah.
But I mean, what myth are you going to take care of?
I am going to talk a little bit about all first-time buyers get the same benefits.
Oh, yeah.
Yes.
Good one.
Yes. We deal with a lot of first-time buyers, and almost everyone that contacts you that's a first-time buyer says, I'm a first-time buyer, assuming that there are the same types of benefits for all first-time buyers. There are lots of first-time buyer benefits out there, from grants to down payment assistance loans to loan programs that are geared more towards first-time buyers, but not everybody that's a first-time buyer is going to be able to take advantage of those benefits. Almost all the first-time buyer programs are income-weighted types of programs, and they look at the household income or sometimes the applicant income. And if your income is over the applicant income, you don't qualify for that program.
So if you make $300,000 a year, do you qualify for any first-time homebuyer program?
No, you don't. I'm sorry to say. Yes. We get a lot of discussion about grants and can I get a grant? There are several different types of first-time buyer grants that can be out there at any given time. They do come and go quite a bit, and they are all geared towards your household income. So anybody that's going to be living in that household with you that does have income coming in has to be counted regardless of whether they are going on the mortgage application or purchasing the home with you. Children that live in the household that are maybe teenagers or adults that have income coming in, whether it be from a part-time job or a full-time job, that has to be included as well.
Over 18, though, so not like your
Yeah.
16-year-olds.
Right. So the first-time buyer benefits are not always available. Right now is a great example of that. There's really no grants out there right now. Sunny
Wait,
May
can I
does.
interrupt for half a second?
Yeah.
I've had two come back. They both worked for the city of Rochester.
Yeah.
City of Rochester has increased their employee grant to
Yes.
$12,000.
Okay.
Yeah.
All right.
And they both got it. They both have accepted offers.
Okay.
Yeah.
Great.
That's great.
Yeah, it
That's
is.
very good.
Yeah.
The city grant is one of those that is available all the time.
Yep.
U of R employees can take advantage of a U of R and a City of Rochester grant. That's pretty consistent. But a lot of the popular grants you hear about, like Home Buyer Dream, that generally comes out in the first quarter of the year. When the money is gone,
Right.
typically it does not come back until the next year.
Right.
And does GRB work with all of the grants in
Yes.
Rochester? Yes,
We do.
We do.
We
Yeah.
work with all the grants.
Yeah, we know how they work. We
Yes.
know the rules. We know how the applications work. We know what you can and what you can't do. A question came up today. Can you use the City of Rochester grant in East Rochester? You can't. Right?
City school district
Yeah.
for the city of Rochester.
Yes.
Yeah. That's
So
the
there's
thing,
all these
city
different
school
rules that,
district. Right.
again, it's really hard to find when you do a Google search
Right.
and you're trying to research them. Just pick up the phone,
Right.
call the Broad Squad. We're happy to talk
Right.
with you.
Yes, absolutely. So the other myth I'm going to talk about is it's not good to buy in the fall. That is a huge myth. It is very good to buy in the fall.
It's my favorite time for my
It's my
buyers.
favorite
I love
time
it.
too.
I absolutely love it.
Yes. And I'll use last year as an example because we have a pretty crazy market here in Rochester.
Yes, we
We've talked
do.
about that a lot on here before. And in the springtime is when everybody is looking for a house and people are getting, declined for offers one after the other. In the fall, things tend to quiet down a bit. We tend to have a lull when school starts. It'll pick up a little bit towards the end of September, beginning of October, but as we slide then into the holiday season, it starts to get slower again. This is a perfect opportunity for folks that want to purchase a home, particularly if you've gotten discouraged with the spring market.
Yeah.
Revisit the fall market
yeah.
because the fall market can be fantastic.
Yep.
Last year, I had almost all of the buyers that were shopping in the springtime get homes in the fall, and they got homes and were in less competition than they were in the spring, and actually got a little bit better prices on the homes in the fall than they would have in the springtime. So get out there and get shopping in the fall, for sure. So that'll do it for our episode of the Broad Squad for this month. We need to talk about what we're going to do next month.
Who's got the wheel?
Let me get the wheels. So this one is who picks,
Okay.
or and then this one
Activity.
is the activity.
This one is our topic.
Who's picking this month, Laura?
Podcast crew.
Podcast crew.
Podcast
Podcast
crew.
All right.
People behind the camera.
Yes.
All right. You want to spin this one?
Oh, me? Okay,
Yeah.
I could do it. Yeah, sure.
Our topic is going to be.
I can't read it.
Okay. Let's see. Our topic.
That light is shining right in my eye.
Oh, our topic's mortgage myths. We didn't take that off last
we
time.
didn't take that off. We can't do mortgage
Sorry.
myths.
We just did that. Oh, what's in the news?
Oh, gee.
That's good.
So we won't even know what we're talking about. I don't know.
Okay, what's in the news? All right. We have lots of
we
news
have
lately, so that we'll have to do our research.
Two unknowns.
Wait, oh, wait a minute.
Well, we've heard from the podcast
I'm
group.
hearing from the podcast group right now. Excuse me. They're saying that they want us to get together and do a painting session.
Oh.
Yeah, in honor of Doodle Academy.
In honor of Doodle Academy. That would be fantastic.
Good
so
idea,
we'll do that
podcast
in
group.
September if the weather is good.
Yes.
We'll come on out to Tina's house and we'll sit on the deck and we will paint.
You can instruct
each
us.
other, maybe, or whatever we feel like doing. And then we'll talk about what's going on in the real estate news at that time.
Yes.
Okay.
That'll be a good one. That'll be a good one. Well, thank you so much for
Thank you.
tuning in this month. We hope that you like and subscribe, and we will see you in September. Bye, everybody.
Bye.
Hearing. Oh my I'm talking about ears, right? She does wear a hearing aid once
Yeah.
now, but she can't.
Did you see
stand it
that?
'cause it really
Did you
makes
catch that on
things
film?
sometimes too
That's pretty awesome.
Yeah.